Okay, we are doing a new episode today of the very best mortgage products in the industry. And, as we've seen with COVID and lots of things going on, lenders are coming up with more and more innovative products, that is not just, your fixed and your variable rate and all that type of thing. And so I have today here from one of our top lenders we use, RMG, Matt Steele, who works in sales there. And we're going to talk about a product called a cashback mortgage. We've been called, and it's also been called the peace of mind mortgage as of late. And Matt, so tell me about your cashback peace of mind mortgage.
Yeah, so it's interesting you bring it up. It's really come to the forefront recently because right now, more than anything, clients are looking for cash flow options. The peace of mind mortgage is built around the client getting cash up front, and they pay a slightly higher rate. So the thing I like about the peace of mind mortgage is that client, now they can use the down payment that they've been saving for so long. They can use that for the actual purchase of their home. And, when they get their first home, they usually need to buy new furniture. Well, there's a whole bunch of stuff that they need to get this new place going. And the peace of mind mortgage can be used for that to go out and get whatever they need once they do find their new home.
Right.
The second thing that I like to go ahead.
Go ahead. Yep.
I was going to say the second thing that I really like about it is, the rates are really competitive on it. In the past, the cashback mortgage has always been what I called it was a tool to make a mortgage fit on the A side. And that was great. If you had a client that was a high ratio client, you could actually use a cashback mortgage to make the file debt service.
Yeah.
Now, it can be used on purchases that are over 80%, so your traditional high ratio files, but it also can be used on your regular conventional purchases under 80% loan to value.
Right. So, obviously, like we typically have been using it when someone has too much debt, and it means they wouldn't qualify, so we can pay out the debt without changing the debt service ratios. But when you really think about it, like the truth is, even though the rate is a little bit higher on a cashback mortgage, it's not really that you're paying more, right? Because with a cashback mortgage, you may get $100,000 of a mortgage amount, or that might be the mortgage that we give you, but you're actually getting a mortgage of 105, so to say, or 103, whatever the cashback amount is that you get, right?
They get that. They get to keep that cash back. So if you're doing $100,000 mortgage, they're doing the $100,000 mortgage like they are, but they're getting, let's just say they go with a 3% cash back, they're getting $3,000 back immediately. And that's not a loan. That's not something that they need to pay back.
Exactly.
That's money that they get in hand, which is really awesome. And at a rate of I'll give you an example. For a high ratio client, the rate on a 3% cash back, so they get on $100,000, they get $3,000 of cash. They pay a slightly higher rate, 3.14. But I've always encouraged a lot of the brokers that I'm working with that, you've got their full financial statement. You're in it for the long run for the clients. So whether they're doing a transfer or a purchase, take a look at some of the higher interest debt that they might have.
Yeah.
3.14 is quite a great rate when they're maybe paying 18% on their credit card or 12% on their credit card.
Right. Yeah, for a client that comes to us and goes, hey, I want to buy a home and I have some credit card debt, I have a credit line, I have a loan, and I want to roll it all into one payment, this is the product where we can do that with, right? So
absolutely.
Yeah, regardless of or not, we have to look at the cash flow kind of narrative. Now there is another cashback product on the market, and CIBC offers a cashback product. So what are the differences between an RMG cashback over a CIBC cashback?
So the thing I like about our way of doing things is And I'm not sure whether it's recent or in the past, but I know some lenders in the past, if you ended up breaking the term, even 4 years into the mortgage, you'd have to give all that cash back. To the
100%.
$300,000 mortgage, for example, if you did a 3% cash back mortgage, they'd have to give $9,000 back if they broke it down 4 years into the term.
Yes.
And that's not even including the penalty that they'd have to pay.
Yeah.
The way it works for us is I call it the fair way of doing things, in that every year that passes, they no longer have to give back 20% of the penalty. It's prorated. 5-year term. If they broke it on the 4th year, then they would only have to give 20% of the cash that they received up front back to the lender.
Right, and that's a huge difference. That's a huge savings. I've seen people with a cashback mortgage from like a CIBC, $300,000 mortgage, $40,000 penalty. You know, those are actual numbers I've seen, penalty and cashback combined. So that same, and of course, you guys do your penalties different than a Big Five bank anyway. So you're talking about that same mortgage being a fraction of the cost in that scenario. A client that I want to talk about that this might be helpful for. Is that you guys can do this now on a transfer. And so like, so explain to me a client that, you know, that's they're not buying a home right now, they're not refinancing, but either they're up for renewal or they're halfway through their term. How could a cashback product help them?
Yeah, so if it's one coming up for renewal, you know, the thing I like about that is it doesn't really change a lot whether a purchase or a file up for renewal. It's that discussion. You're getting the personal financial statement, or if not, you're just having the discussion. Hey, tell me a little bit about what's going on. Maybe they've got a child going off to university and they put some debt on their credit cards. Again, these funds can be used to pay down any higher interest debt. The second piece I like is if, say, you've got a mortgage where the client has maybe a higher interest rate, say it's a 3.5% interest rate, whatever it might be, and your client is uncertain of where rates are going to be in the years to come. Say their mortgage is coming and due in 2 years, and they feel like, you know what, I just had a 3.5% interest rate. And I've got a feeling that in 2 years' time, I'm going to be back to where interest rates were when I originally booked this mortgage.
Right.
So they could use the cash back if they wanted to help subsidize some of the penalty that they might have and book a lower interest rate today. Right. And that way they're securing, you know, we're in historically low interest rate environment. A 1% cashback mortgage is a rate of 2.74, really a great rate, and they get to have 1% of the mortgage given to them in cash. So it could help subsidize some of the penalty they might have in another lender, and that way they're securing the 2.74 rate for the next 5 years.
Right. And I think one thing people don't realize with cashback and doing a transfer is that, like, and this is where there's a real big advantage on things right now, is that if I have a situation where, you know, I'm halfway through my renewal and, you know, I need some cash, but I don't have a lot of equity, but I put 5% down, 10% down at the time of getting the mortgage. That's a cashback is something that can be used. That's right.
Absolutely. Absolutely. Yes. It can be used as long as we're not doing a 30-year amortization. Mm-hmm. And as long as the purchase is under $1 million, then we can do it on any file that meets those minimum guidelines.
Right, right. So right now in our current environment, you know, certainly where people may want some extra cash, but don't have a lot of equity because they've bought in the last few years, they put 5% down. These are opportunities to get extra cash without having to do a lot of extra work. Like, I think it's a great way if we're going to do a small loan, adding on to the mortgage or something like that, right? So,
yeah, you're completely right, because I'm sure you get your clients coming back to you they're looking at doing a refinance for whatever that they need the funds for. And you're right, if the equity is not there, you have to say, you know what, we've got to wait it out until you get some appreciation in your property. To your point, this is an opportunity to, we call it a mini refinance in some, viewed in some circumstances. It's a way to access a little bit of cash. Again, just doing a transfer on the mortgage.
Great.
Yeah.
Okay. Well, yeah. I mean, I think it's a great product, and I think it's definitely, when we're thinking about, you know, one of our things that we do with clients is we want to offer 5 particular options to every client. Like, these are the 5 options that you qualify for that would be a good idea to look at. And we're going to talk about fixed and variable. We're going to talk about putting more down, all those other things. And we're always talking about the idea of doing a cashback mortgage as well. It doesn't mean that you'll take that, but it means that there is some consideration that people need to have towards that, you know, because it's going to fit for a lot of people, right? So anything else more that you want to add, Matt, about the product that we haven't covered?
I think the last thing that I'll touch on, and I'm sure this is a discussion that you would have with your clients out there, is at the end of the day, a lot of clients are first looking for rate, and I think the big component to also look at is cash flow. And I just want to keep in mind that whether the clients use the money for anything, you know, paying down debt, all those other options are great. They could simply have it sit in their bank account and have it subsidize their monthly payments. And at the end of the day, they'd have the cashback option provides them an additional cash flow that they need on a monthly basis. So, you know, all the other things we talked about, why not just have it sit in the account and help it make the payments and provide a little extra cash flow. Totally. Thanks so much for having me on. I really appreciate it.
Yeah. So there you have it. If you are a customer and you're looking at buying a home right now, you are looking at your mortgage up for renewal, or you already have a mortgage and you need to get some extra cash for whatever reason you've been turned down, give us a call, direct message us, or send us or call and text 1250-814-1627, and we'd love to give you a hand. Thanks so much, Matt, for your information today. I totally appreciate it, and hopefully we'll have some clients that will really work out for this product.
Sounds great. Appreciate it. Thanks, and have a great day.